I'd like to welcome those of you who are new to my YouTube channel. I'm not flashy and I'm not funny, but I'm damn good at what I do. Been doing this YouTube channel for 18 years. Every single video has a pick and I review them all, so I've got a proven track record. I hope that you like what you see and stick around. So we have the Iran war going on right now, and everybody came in thinking that we're going to have lots of trading opportunities Monday. Oh my God, the market's going to sell off. Inflation's going to go up. Oil prices are going up. The market's going to tank. I'm going to buy some puts. Don't listen to the news. Don't listen to the analysts. Ignore all of that stuff. Quite honestly, they don't know shit. You don't know shit. I don't know shit. If you come in with preconceived notions of what's going to happen, you're going to lose money. But that's not to say that there aren't trading opportunities out there. There are. What we need to do is we need to observe what buyers and sellers are doing. And that's what those little green and red rectangles on the chart tell us. They help us determine who's in control and to what degree. And that is where opportunity lies. And that was our job over the course of the last couple of days. Today, I'm going to be focusing on swing trading, and this video is going to be relatively short. So what did we learn? What have we learned from the moves that we've seen over the last 2 days? First of all, I can't reinforce this point strongly enough. Price is truth. Trade what you see, not what you think. Trade what you see, not what you hear. And I'm going to show you how to do that. I show you how to do that in all of my videos. And I'm going to show you the price action that's going to help you get through the day and what we've learned over the last couple of days. So it's time to evaluate. I had mentioned to you in my Sunday video that we just need to watch. We don't need to react. We have bullish positions on. This is a day to evaluate. And Monday, from the opening bell, first 5 minutes, I could tell that the market was not going to sell off dramatically. And I posted that in my chat room. Within 20 minutes, I was very confident that the gap was going to fill. It's exactly what happened. Yesterday, I did a quick, short little video. I'd mentioned to you that my voice was completely shot, but that you should just follow what I instructed you Sunday, because Monday, pretend like it never happened. Tuesday is when we got that big market sell-off and that big drop lower. And you can see it right here in the chart, way below the 100-day moving average. So that was the day for us to evaluate. So I had mentioned to you on Sunday that our goal and my pick, which I review in every single video, I review my picks, Gilead was the stock that I wanted you to focus on. And in that Sunday video, I told you that no matter what the market does, I don't care what the market does. I had advised you to try and buy Gilead down near the low end of this long green candle, somewhere around the 144, 145 level. If you're able to do that yesterday, you had a really nice opportunity to make $3-4. That was the objective while we're evaluating market conditions. I still like Gilead. What did the stock do? You can see initially it sold off with the market, big gap down, got down to about $145, closed $3.50 higher. Thank you very much. So what am I doing with Gilead now? Am I long? Am I going to stay in it? I'm continuing to evaluate what the market is doing, but I like that D1 price action. These are long-term buyers. They're looking 2 years out. They don't care what happened in Iran. They like Gilead 2 years out, and they see this as a buying opportunity. That's why the stock is so resilient. So I like the pick. I did give you one a couple of weeks ago on TSM. It's been a little bit problematic because I am short the 350, 750, 355 bullish put spread. You can see the stock was at 353. But I'd mentioned to you, don't do anything. You can expect to take a little bit of heat on this, but the stock should bounce right back. How do I know that? Because look at the price action. These are buyers in here who like the stock long term. This morning, let's take a look at the price action. TSM is right back above $360, out of the money. I'd mentioned this in the Sunday video. You're going to take a little bit of heat the first couple of days, and then the stock is going to run back out of the money. The options are going to expire worthless. That's why we're selling out of the money puts. That's why we're selling out of the money bullish put spreads. We're distancing ourselves from the action. We're taking advantage of accelerated time premium decay. Market pulls back, stock pulls back, market finds support, stock rallies higher because it's strong relative to the market. Options expire worthless. We pocket the money. That's how this works. So I'm going to show you another pick in just a second. But what I want to do is to describe what we've learned from the price action the last couple of days. So you can see here that this is the 100-day moving average, and this is the move lower that we've seen. So let me put up a slide. I want to describe to you the difference between strong price action and weak price action. This is a strong move lower. Nice stacked long red candles, 4 of them in a row. First of all, you're seeing closes on the low. Second of all, little to no overlap in the candle. So you can see how this one started right where the last one left off and continued all the way down. Then we have another red candle. Then we have another red candle. When we have them consecutively like this, it shows us that sellers are firmly in control. They are smashing every bid that they can find. They're relentless. That helps us predict future price movement. This tells us that the trend lower is strong and that the most likely move is continuation in that direction. A weak move lower features mixed overlapping candles. So you get sellers coming in and then an instant bounce, a green candle. Well, buyers had some control in here. They were able to retrace some of this long red candle. So mixed candles are not good. When we have big retracement more than halfway through the prior candle, that's also a sign that buyers have some say. They're not in control. Sellers are mildly in control because we have a gradual downtrend. So these are the types of trends that can reverse very quickly. You can see that the move lower is very stubborn. Here, we've got closes on the high. If sellers were in control, they would have been playing whack-a-mole with this. You would not have seen nice long green candles closing on their high. Now we finally get a nice new low and a nice long red candle. The next day, boom, we bounce right back with a green candle that closes above the open of that red candle. That tells us that sellers are not in control to any large degree and that we should not be expecting big sustained moves lower. So what did we see in the market? We're seeing overlapping candles. We're seeing long green candles that are retracing into the previous candle. We can put up the 5-minute chart. Let's go to the 15-minute chart. And actually, this is showing us what's happening overnight. So you can see this is where the market closed yesterday, and this morning overnight don't have much of a reaction, but this morning we have actually poked back above the prior day's high. That's what we would like to see from a bullish standpoint, and this is a significant price point. But let me zoom out a little bit, and we can take a look at the price action that we've had Monday and Tuesday. This long green candle right out of the gate told me that the market was not going to sell off into oblivion based on the news from Iran. No, in fact, we filled the gap and rallied higher. Yesterday, we had this initial decline, which was quickly erased. And once we were in this gap, buyers came in. Market closed near its high. This is a wimpy move lower. Support is forming. And I'd mentioned this to you in my Sunday video. Bull markets die hard. They are the boogeyman in a horror movie. You can stab them, you can shoot them, you can set them on fire, you can run over them with your car, and they still come back. So it takes an awful lot to turn a bullish market into a bearish market. So we don't go picking market tops. We're observing, and over the course of the last few days, we've been able to see just how strong the selling conviction is. And that's going to help us position ourselves. Right now, I'm still neutral to slightly bullish, after seeing this price action. So that's the type of trade that I'm going to be showing you. What are the key price points that we need to watch? The 100-day moving average. And you can see this support level here that I'd mentioned in my video Sunday. I'd mentioned to you that this was a key horizontal support level, and that once the 100-day moving average fell, this horizontal support level would fall. And that's exactly what happened yesterday. We had that big early deep drop because we were taking out all of those sell stops. Those had been triggered. This is all mechanical. This is buy and sell programs generating activity that looked nasty on the surface, but it really wasn't if you understood what was actually happening. So then we rallied the entire day, and now we're back in a position to challenge the 100-day moving average. I told you not to pay attention to the news, but what has happened in the news? Are conditions worse off now than they were 2 days ago? I don't think so. Losses have been minimal. There's air superiority right now over Iran. We've taken out their navy. U.S. ships are going to be escorting oil tankers through the Strait of Hormuz. I don't see this as escalating. Yes, we could be there longer than we hope, but there are going to be no boots on the ground. So as far as I'm concerned, I don't even need the news, but that is the news. I'm looking for a move higher above the 100-day moving average. So what I'd want to do is find a stock that's been really strong. I used Option Stalker Pro, and this stock was in heavy buying yesterday. Let's put up the chart here. ASTS, I like it. Look at that strength throughout the course of the day. Stock gave a little bit back into the close, but what did it do Monday morning when we had all of that Iran news? Rally, rally, rally. It had earnings after the close, and you can see they loved the number. Stock is above the 100-day moving average, it's above AVWAP-E, and it's challenging the 50-day moving average this morning. Let's take a look at that 5-minute chart and see what the stock is doing this morning. It's up a little bit from yesterday's close. Closed around 93, it's at 95. So the puts that we're going to be selling, we might not be able to get a whole lot for. Well, actually, we won't be able to get as much as we would have yesterday on the close. I want to sell the $80 puts. You can see they were bid $320, offered at $365. So what's the play here? What are we trying to accomplish? I want to sell those puts because I'd like to buy this stock at $80 or lower. So when I collect this premium, and we're only going out to March 20th, so we have to get through 2.5 weeks of price action right now, and these puts will expire, or we will buy the stock at a net price of $77. Let's take a look at that, and I'll explain the strategy in a little greater depth. We can't be overly bullish right now because the market is trapped in this sideways horizontal trading range with moves in both directions. So this is not a time to be aggressively long. This is not a time to buy calls on stocks because we don't have a market tailwind. It's just chopping back and forth. Selling premium is the way to go. Been doing it for 6 months with very high success rates. Watch my previous videos. So how would I approach this? Would I buy the stock at $80 below this horizontal support post earnings? They liked the number. Stock has horizontal support, 100-day moving average, above AVWAP-E, challenging the 50-day moving average. Stock is at $95. So it could shed 15%, almost 20% of its price in the next 2.5 weeks, and I'm still going to be okay. So I hold half of the strike price in reserve, which is $40. I collect $3 or more. Get as much as you can for these. I don't know where they're going to open, but if you collected $3 in 2.5 weeks, you are going to make a 7.5% return on this trade. I love it. Stock can stay flat. Stock can move lower. Stock can go higher. I make money in all those scenarios. What's the wild card? The market. Am I afraid of the market right now? It could drift a little bit lower, but it's not going to tank. Based on what I have seen And sometimes knowing what's not going to happen is just as important as knowing what's going to happen. In this instance, I don't feel the market is going to tank. Based on the price action that I have seen, there are buyers. Is the market going to race up and break out to a new all-time high? No, but it's not going to tank. And if it's not going to tank, then a stock that is already strong is going to tread water. It has relative strength. Those puts are going to expire worthless with a very high degree of probability, and I'm going to make 7.5% in 2.5 weeks, but I'm going to hold half that strike price in reserve in the event that I have to take assignment and actually buy this very strong stock at a very good price. That's how we're playing this. Please come in, take my free trial. I won't even ask you for a credit card. Watch me trade during the course of the day. You'll get a feel for how to read price action. You'll have access to a course that took me over 3 years to write. Don't have to subscribe to anything. Just come in and learn, observe, see what we do. I think you're going to really like what you see. So as far as tomorrow, I'm going to do a day trading video before the open. Going to get into details of what's happened over the course of today, how the day is setting up, where the market's looking to open. I'll find some day trading opportunities. We do have ISM services coming out this morning. They're looking for 53.5. It's an important number. It comes out after the open, 30 minutes after the open. So be aware that this news is pending. I don't see it moving the market much. The focus right now is on Iran. We'd like to see a number above 53. ADP is coming out this morning. It's going to give us a look at the private sector employment. They're looking for 50K based on last month's jobs report with a lot of private sector job growth. I think they're going to be able to hit that number, maybe even a little bit higher. And then on Friday, we've got the jobs report. So all the economic data points right now, they're major economic data points. They're important, but they're going to take a back seat to the Iran war right now. And what this has done for us, this sell-off that we've seen and this news event, is it's given us a chance to observe. It's given us a chance to learn. And only through that observation, only through that price action, can we determine where the market is going next. I believe we're going to see a bounce. Watch that 100-day moving average. That is the critical price point. What would I like to see from a bullish perspective today? I'd like to see us get through that 100-day moving average today, and I'd like to see us close above it. If that doesn't happen, am I in panic mode? No. That's simply what I would like to see happen. Thank you so much for watching. Please like, share, subscribe to my YouTube channel, and we will see you bright and early tomorrow before the open. Thank you. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.